Hello, everyone. My name is William Mucker. I am a client executive with Camaplan and would like to thank you all for joining us for today's webinar, Decades of Outperformance, Make Your Retirement Income Infinite with Mobile Park Homes. Before we get started, we do have a brief disclosure to go through. Everything in today's presentation is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We'll never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information if you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I'd be more than happy to help. And without further ado, I'll pass the controls over to you, Brian.
Yeah, very much appreciated, Will. I'm looking forward to jumping on Talking Shop and doing my best to add as much value as I can together while we're together here today. So let me go ahead and do my best to share this screen. We'll work through the tech side. Boom. Can you see that?
Looks good to me.
All right, life is good. As Will had mentioned, my name is Brian Spear, guys. Looking forward to trying to help out as much as I possibly can today. I'm principal at Sunrise Capital Investors, a private equity real estate investment firm based down here in sunny Clearwater, Florida, one of the best areas in the country, if I do say so myself. A little bit of background on myself here, guys. I primarily handle investor relations as well as regulatory compliance for Sunrise Capital Investors. I've helped investors allocate over $100 million to mobile home park investments over the last decade. And a brief personal note about myself, I was fortunate to earn numerous academic and athletic scholarship offers, and I ultimately settled at the University of Kentucky, where I was captain of the baseball team and I received my business degree. Bleed Blue, was one step beneath academic All-American, had a good run. Now I'm just a washed-up has-been, but had a really, really good run. For those of you who are unfamiliar with myself or Sunrise, a little maybe 60-second version of our track record here. We are proud to have successfully closed 3 mobile home park funds. We're on our 4th at present, and we've got 15 full cycle deals under our belts, which average north of 40% internal rate of return across those deals. So this past quarter, our investors received their 27th consecutive quarterly distribution, no delays, no capital calls whatsoever. And the folks in the closed funds, they're currently enjoying what we call infinite cash flow. We're able to achieve these results through our unique strategy and the power of mobile home park investing, and can't wait to dig into it today here. We also put out a ton of educational material to try to help folks along their investment journey. We host a couple of really popular podcasts called Real Estate Investing for Cash Flow, as well as the Mobile Home Park Investing podcast. Literally been downloaded millions of times by folks all over the world, over 125 countries now. So hundreds of hours of free content for you to peruse at your leisure, should you have an interest in doing so, to dig really, really deep and granular on mobile home parks and the business model itself. We talk about how we negotiate the deals, how we find the deals off market, how we implement the value add plan, and so much more. So if you want to get really, really granular, would point you in that direction. My business partner, Kevin Bupp, he's also a best-selling author of The Cash Flow Investor. So again, a ton of additional stuff for you guys to peruse should you have an interest in doing so. But let's dig in here to the mobile home park sector. So my goal today is to try to provide you with some high impact knowledge that you can take with you on your investment journey, okay? In a climate where many previously sound investments are going bust left and right for one reason or another, I feel an obligation to really make some noise around here and let people know what they might be missing out on as far as the crazy world of mobile home parks. Really, they've been exceptional for a very, very long period of time. It's an exceptional asset class, and we feel like our unique twist and strategy on it is a really perfect pair when it comes to generating consistent retirement income and really tax efficient investment vehicles. So with that, there's a handful of reasons why folks might reach out to us, and a handful of reasons why you might be here today trying to learn a little bit more about investing through self-directed IRAs. One is, unfortunately, folks typically lack certainty on their retirement income. The truth is, kind of the old traditional investment advice of investing in a 401k or an IRA. A lot of that is outdated. It's built on kind of an outdated model from many, many moons ago that really adversely affects too many folks throughout this country, in my humble opinion. I mean, the business model in and of itself is to try to build a pile of cash, don't touch it for 20, 30, 40 years, however long. And then ultimately, at the end of the day, hopefully they've built a big pile of cash and then they start living off of it. And the business model is to literally try to die before you run out of money. And, that's an unfortunate circumstance from my perspective, just a perverse way to look at it. You guys are here because you're looking to flip the script on traditional investment advice. You're looking to take control of your financial future and ultimately create some certainty. And we do our best to espouse that same exact philosophy. Second piece is you guys might be paying too much in taxes. Clearly, just by virtue of looking at self-directed IRA investing, whether it's traditional, Roth, whatever the case may be, you're trying to skin that cat. Kudos, and we love every bit of that. We're always looking to try to help folks be tax efficient in the manner in which they're allocating capital. High taxes, high income is a beautiful thing, but it often leads to high taxes, which, eats into people's profits and depletes the fund that they could otherwise reinvest for compound growth, et cetera. So we're just trying to find ways to be very tax efficient along the way. Kudos to you. And then the last is folks are ultimately looking to break those kind of golden handcuffs, as it were, right? A lot of times folks they feel trapped in what they do on a daily basis. They're trading time for money. A lot of the folks that work with us, they're really successful people. They show up, they deliver value with what they do. They're really high quality professionals, et cetera, but they really can't experience maybe real freedom, right? Freedom to do what they want on their own terms because they don't really have the passive income that they would need to really be able to do what they want when they want with the folks that they want. And for that reason, they're handcuffed to their work and they often feel tired, they feel jaded, burnt out, and the like. And at the end of the day, what they really are in a situation where they're worried about missing priceless one-on-one time with their family, right? So if they're have a lack of certainty of retirement income, folks are paying too much in taxes and ultimately feel trapped in what they do. They ultimately really want to just drive passive income over and over to allow themselves to live life on their own terms. Because the truth is, no matter how big that big pile of cash is that you ultimately accrue, money doesn't buy happiness. At the end of the day, folks are looking for freedom, and that freedom comes from cash flow, an infinite cash flow model, perpetual streams of passive income that allow you to do what you want, that won't ever go away. And you have that certainty to be able to live life on your own terms, to be able to spend time with the people that you would really, really want to spend time with while you have it. And the great thing from our perspective is that mobile home parks, like we're digging into today, can solve all these problems and then some more. So why is that the case? Ultimately, because mobile home parks have historically outperformed every other real estate sector for quite literally decades, and that is likely to continue for as far as the eye can see. So we'll dig into it, share much more information, the high-level macro thesis, and ultimately a bunch of data along the way on why that's the case. But we believe it's by far the best real estate sector around. So why? I mean, today you're going to learn why mobile home parks specifically. And we believe that investing in mobile home parks, particularly within a fund structure, is extremely powerful. Why is that the case? The truth is it's almost too simple. It's easy, simple supply and demand economics. But as Charlie Munger once said, take a simple idea and take it seriously. As I said a moment ago, a lot of this, outperformance in the mobile home park sector really just comes down to the basic fundamentals of generating profit from anything, which is just basic supply and demand. So let's dig into that here. The mobile home park supply and demand situation in this country has become almost outrageous. It's getting to the point where it's so massive, it's almost becoming more of a rigged system. Sad but true in favor of investors. Now, of course, I said almost, but I really want to try to paint a picture for you guys here. The demand for the product, the need for affordable housing in this country is tremendous, and it's continuing to grow day after day. It's insatiable. We'll walk through a lot of why that's the case. And really, the supply is negligible, and it's actually kind of shrinking year over year. So I look forward to sharing more as we progress. And we'll also share a little bit of insight on why the best investors in the entire world are allocating literally billions of dollars to the space. I mean, Warren Buffett, Sam Zell. Warren Buffett's generally revered as the best investor of our generation, and Sam Zell is known as the best real estate investor of all time. Again, unfortunately, just passed away. Rest in peace. They're literally investing massive amounts of capital. Their firms have invested billions of dollars into the space for literally decades. So we're going to kind of walk through why that's the case, why the asset class has developed outperformance for literally over 20 years running, and why that's likely to be the case for the foreseeable future. And then another interesting thing that we're going to walk through today here is the infinite cash flow strategy and why it's so powerful, specifically inside of the crazy world of IRAs, right? It might be the most little known part of our personal business model, but once we explain it, it's the part that virtually everybody gets the most excited about. Most people are still investing for finite gains. They do a little bit buy, fix, and sell, if you will, and that's great. We've done that on numerous occasions. But we see that as kind of the old way of investing. And there's a much, much better approach if you're looking to build legacy wealth over time and generate the best multiple, the best equity multiple over time. There are a couple of different things about the new way, this infinite cash flow model, that make it very, very exceptional from our perspective. It's, first of all, it's infinite. It literally breaks the mathematical model. It's a way of investing where when you invest, you receive your entire principal back in full, and then you just keep perpetually making income from that property, or in our case, because it's a fund structure, the entire portfolio of properties for decades to come. Your investment becomes automatic cash flow generators on and on and on for year after year after year once you get to that infinite cash flow situation. And then secondarily, it's just extremely efficient from a tax perspective. The foundation of the infinite model is built on never selling the asset. So we implement a buy, improve, refinance, and hold strategy where we provide a lot of tax benefits immediately out of the gate. And then we implement the cash out refinances to get that cash back in a non-taxable manner. And then due to the fact that we're not selling the assets, again, the cash flow continually comes in without having to pay taxes down the road. Again, trying to help as many folks as possible generate cash flow and build legacy wealth in a tax efficient manner. And that is the mission we have over here at Sunrise. It's the same mission today as it always has been, and it always will be. We're trying to help as many people as possible generate cash flow and build legacy wealth in a tax efficient manner, because that's what I'm trying to do for my family. It's what Kevin's trying to do for his family, his wife, his children, and we're going to help as many folks as we can along the way. Back in the day, we used to buy all these mobile home parks with our own personal capital. And then we started branching out with friends and family, and it continued to grow to the point where we were doing some more JV structures. And eventually it got to the point where we started to have to end up growing into a fund structure, which we did in 2017. And now we're on fund 4 here today. But the business model, the fundamental philosophy of why we do what we do is the same as it was at the core when we started the business many, many moons ago. Bought our first mobile home park in 2011. So why mobile home parks? For decades, the asset class has flown under the radar as a sound business model and an investment niche. And while we've loved the business model for many, many, many years, it's been under the radar for most investors. But that's changing to a large degree. It's the secret is starting to come out. On the right side of the screen, you'll see a photo of Sam Zell, readily known as the best real estate investor that has ever existed. A truly exceptional individual. And he's quoted verbatim as stating that trailer parks are the best real estate investment that has ever existed. And you can't get much better praise than that, right? So why is that the case? To a large degree, it comes down to those supply and demand economics. So let's dig into some of the headlines for many, many years. The truth is, guys, there's never been such a severe shortage of housing in this country that's readily accepted from public and private sources. And it doesn't matter what kind of residential you're talking about, whether you're talking about single family, multifamily, affordable housing, and the like. There's just not enough units in this country. We're short more than 5 million homes. Again, this is a little bit outdated, but we literally can't build homes fast enough. This is more recent as of the second quarter of 2024, and the affordable housing crisis particularly is exceedingly acute. Over 90% of the largest cities in the country have massive, massive affordable housing issues, where there's every single renter is spending significantly more of their income on rent than they otherwise should be to try to have a really sound life, right? It's an unfortunate circumstance, and it really is not an easy problem to solve. But this unique supply and imbalance is really why some of the best investors are getting in this space. Big dogs, Blackstone, Carlyle Group, TPG, sovereign wealth funds throughout the world are allocating hundreds of millions of dollars and now billions of dollars into the space because the writing is on the wall. The supply and demand economics are exceptional in their favor. So if we zoom way back out, again, all different types of real estate, residential are having this issue. But why is that the case? Much of the problem stems from what occurred during the great financial crisis of 2008. Not going to go into it super deep here, guys, but even the government is aware. Again, the bottom of the screen here, you guys will see that Freddie Mac, even the government is aware that this problem is so acute that it cannot be solved for the next decade, for over 10 years. There's just not enough homes in the marketplace. Why is that the case? Again, there was a massive supply crunch that was a decade in the making. During the lead up to the Great Recession, everybody was building homes, right? HGTV, everybody's running wild. Everybody all of a sudden was getting involved in the real estate sector. And once your taxi driver and your Uber driver start talking about real estate investing, that's when you know that there's a bubble, right? Or stock tips or whatever the case may be. That's when you know that we're likely at the top or right at a bubble. And obviously, the bubble burst and fell off a cliff. The chart on the left side, you'll see 2006 to 2009. Basically, a lot of the home builders went bust. And even to this day, that next decade, while the population continues to grow in this country, we had negligible new supply come online, and it further exacerbated the affordable housing crisis and this massive shortage of housing. The chart on the right side basically conveys that at the depths, there was basically only 1 month of available homes in this country for residents who needed them. It's just an all-time low and just a really, really difficult problem to solve that likely won't be solved for many, many, many years into the future. And that's all residential, but it's even more acute in the affordable housing side of it. So here we go on the high demand for affordable housing specifically. This is a Joint Center for Housing Studies from Harvard University, a chart that basically outlines any county in which there is a lack of affordable housing, where there's a dearth. They don't have enough affordable housing. Anywhere you see that red, orange, yellow, beige, that is a county that needs more affordable housing. So clearly, it's literally all over the country. The vast majority of the country needs more. And again, this was from 2019. The freshest data is here. The census data from 2022, and the study just came out, I believe, in 2024. But it's the same old song and dance. Massive, massive affordability issues where there's gigantic renter cost burden all over this country, an acute problem on the affordable housing side. So while there's this enormous demand for the product, you would think that there would be new supply that comes online, right? I'm a proponent of Adam Smith's invisible hand, basic supply and demand economics, right? When you've got massive demand for a product, one would assume that there would be new supply that comes online to ultimately meet the demand in the marketplace. But that's not what we see in the mobile home park sector. Why? In a word, overregulation. It's obvious that we need to build more affordable housing, but you don't see it in the marketplace. Only 97 new mobile home parks were constructed nationwide in the decade ending in 2016. There's really two reasons why this is the case. The first is the NIMBY syndrome, not in my backyard. Folks just generally don't want to live next to a mobile home park. Imagine, you in your home at this moment, right? If you personally own your residence, imagine if somebody that is immediately juxtaposed, the parcel of land that's immediately juxtaposed to you, wanted to build a mobile home park. Most folks would be a little bit uneasy with that, even though there's an outdated stereotype of mobile home parks and trailer trash, as it were, because they believe that that mobile home park being created immediately next to them is going to lower their property value. So the NIMBY syndrome runs rampant. And then secondarily, the thing that most folks overlook is that when a city approves a mobile home park, the truth is they actually lose money. It is a money-losing endeavor from their perspective. Why? Because mobile home parks are actually taxed differently than real property, because a mobile home is actually taxed like chattel. It's on a chassis, so it's actually taxed like a truck or a car. So it doesn't provide near as much property tax as a piece of real property, a stick-built home would. And when you've got hundreds of children on a relatively small parcel of land, you got to pay for a lot of public tuition for 18 years for public schooling and a lot of other services in the society. And for that reason, the expense load of that mobile home park is higher than the revenue coming in. So you don't see any new mobile home parks developed, even though it's in dire need in this country. And again, this is a little bit of outdated information. This is through 2024 here. So still, again, every other sector, you can pretty much see if you have a good opportunity in, let's say self-storage, and you have a great investment. Let's say you made an investment in a self-storage property that had a great thesis and was doing well and actually was performing for a year, 2, 3, 4, 5, however long it's performing. But unfortunately, a competitor says, "Oh my gosh, yeah, this is a great market. Clearly, this guy's doing well. I'm going to build the same self-storage facility right across the street." Well, what does that do to your facility? Clearly, it adversely affects your ability to serve the community. The demand for your product is going to go down because now there's twice as much supply. Well, in our niche, that doesn't happen. The demand for the product keeps going up, and there's no new supply coming online. Again, this is still historical data through 2024, but what about forward facing? It's not about kind of what happened behind, but what about in the future? Where are we going? this is the most recent data that we could possibly provide. We pay tens of thousands of dollars every single year for institutional data to try to help us skate where the puck is going. And through 2028, as far as we can possibly predict, there's unlikely to be any new affordable housing coming online, any new mobile home parks coming online. It means that the ones that are already in place are likely to continue outperforming, comparatively speaking, to other real estate sectors. And that's really what's played out over time. What that does when the demand is so massive and there's no new supply coming online, it creates this huge moat in the industry. And it's why Warren Buffett is such a huge player in the space. You might not know it, but Warren Buffett, he loves mobile home parks. He's the biggest investor in our asset class. He's the biggest manufacturer of mobile homes through his company, Clayton Homes. He's the biggest financier of mobile homes through his company, 21st Mortgage. And he's the second biggest lender on mobile home parks through his company, Berkadia, which is also a subsidiary of Berkshire Hathaway. And the interesting thing about Warren and how he feels, and not just saying the business model in general, is that it's a business where we have the opportunity to do well financially by doing good socially. It's the definition of a successful business model. As Warren Buffett says here, we're taking care of a lot of people that would not otherwise have a chance at home ownership. And for me, it runs pretty deep. It's personal for me. While we've done some pretty neat things, we've owned mobile home parks in 18 different states now, all over the country, hundreds of millions of dollars of stuff. Life is good. My very first experience with mobile home parks was when I lived in one when I was 10 years old. My parents got divorced. My dad moved to Gary, Indiana, and my mom moved to a mobile home park on the south side of Chicago. And it's not because we were in dire need and we were trailer trash and this, that, and the other, right? I mean, it was the best financial decision that my mother could make at that respective time. It by far was the best unsubsidized affordable housing in the country. So that's where she selected to go. And my mother, again, she is exceedingly intelligent. She has an accounting degree from a Big Ten university, University of Illinois, one of the best accounting programs in the entire country. And it just was the best decision for her at that time. So what I know is that it's the definition of a successful business model where it's beneficial to the residents, the best affordable housing in the marketplace. It's beneficial to the individuals who are managing those individual mobile homes, right? The mobile home park managers, the on-site, the property management. It's beneficial to the investment companies that allocate capital to go ahead and buy them and run them on behalf of everybody involved. And it's beneficial to the limited partners who actually allocate the capital and invest in the deals. It is the definition of a successful business model. And it's why we love the asset class so much. And another piece that we love about it is it's a business model that's not easily disrupted. I mean, it is necessity investing, right? Food, water, shelter. It's not easy to disrupt the asset class. Warren Buffett doesn't get involved unless the business has a gigantic moat and is likely to be around for the foreseeable future. By way of example, I could go on and on and on, but this is a very simple example, right? Imagine Blockbuster 30 years ago. Redbox comes in, completely disrupts the business model. All of a sudden, Redbox is what you would consider to be the new hotness. Fast forward another 10 years, 15 years. If you had invested and caught the wave on the run-up of Redbox, you might have done well. But the truth is, at some point, somebody somewhere, they're going to mistime the market. And if you have a new disruption that comes in, technology disrupts it, ultimately it can adversely affect it. Fast forward another 15 years, Netflix comes in, completely disrupts the marketplace. And all of a sudden, you're in a more precarious situation. Especially if you're going to invest through a retirement account and you are likely to allocate capital for a long period of time, likely decades. You want to be in a scenario where you're investing in an asset class that is not easily disrupted. Again, this is necessity investing. Affordable housing has been in high demand for literally thousands of years. It is unlikely that it will not be in demand for the next year, 10, 50, 100, 200, keep going. As far as the eye can see, affordable housing is likely to be in high demand, which is why we like the product specifically for self-directed IRA accounts. I could go on and on about enormous amounts of benefits associated with the asset class. So I'll try to be brief here, guys. We always are focusing first on capital protection, right? Rule number one, don't lose money. Rule number two, don't forget rule number one. Massive outperformance in terms of the supply and demand economics in your favor. Huge piece of the puzzle. Another piece we love is that there's minimal capital expenditures. Because we don't own the majority of the homes themselves, right? What do we own? We own the underground infrastructure. And compared to other real estate sectors like office, retail, multifamily, where you've got to, replace all of those roofs and all the various different sticks and bricks, et cetera. In the mobile home park sector, you really don't have to do that. So more of the top line revenue falls to the bottom line. In addition to that, exceedingly recession resistant. Recession, depression, so much more. The asset class continues to plod forward. I've not yet seen one of our mobile home parks ever have a situation where we've had to lower rents. Virtually every other real estate sector, when they hit a period of recession, they have to maybe adjust what they're doing. Maybe revenues go down to some degree. Some data was put out from Green Street, which basically conveyed that across any respective real estate sector, that mobile home parks are least impacted by changes in the economy's GDP. By way of example, lodging is right at the top of that list. So hotels, right? So if the economy sputters, more folks are less likely to go travel around, stay in hotels, et cetera. But mobile home parks, doesn't matter. If the economy's booming, if the economy's busting, doesn't matter. The economy, mobile home park residents need affordable housing. It's going to plod forward regardless. So again, exceedingly recession resistant. Phenomenal cash flow. Again, lifetime cash flow. Very, very stable over long periods of time. An example is folks think that mobile home park residents are transient, kind of destitute, trailer trash, et cetera. Misconception, of outdated for decades, but it doesn't change the fact that that's out there. By way of example, mobile home park residents are extremely sticky. Folks would be surprised to hear that the most tenured resident in one of our mobile home parks has been there for 45 years. They've been a tenant on the rent roll for 45 years. Why? Because once they actually own their home outright and all they have to do is pay lot rent, where the lot rent might be $300, $350, where in a first world civilized society can you live for $300 a month, $350 a month? It really doesn't exist. So once they own their home outright, they virtually never leave. And that's what makes the cash flow so stable over long periods of time. Um, Another thing we love about the asset class is it allows you to generate outsized returns for a myriad of reasons, and which we'll dig into, but it's a fragmented real estate sector. And you can buy a lot of deals off market direct to owner from mom and pops for this exact reason. We'll dig into that a little bit more in just a bit. In addition, it's got phenomenal tax benefits in terms of accelerated bonus depreciation compared to other asset classes, typically about twice to three times as tax advantaged in terms of the depreciation schedule along the way as well. Maybe too granular for this forum today, but massive, massive tax benefits as well. And again, with that very, very basic, simple understanding of supply and demand, right? One can easily assume that with this gigantic, strong and increasing demand and artificially constrained supply, we can comfortably expect over long periods of time that the asset class likely is going to have property values that continue to increase. And that's what's really played out. For literally decades, mobile home parks have outperformed every other real estate sector, and that's likely to continue for the foreseeable future. Most recent data here at the top of the list, manufactured housing. Again, that is synonymous. It's the same colloquial term as mobile home parks, but it's synonymous. Trailer park, mobile home park, manufactured housing community, all the same thing. Land lease lifestyle community. People have been trying to change the name of these to try to avoid the stigma associated with trailer parks, but really mobile home parks stuck. That's what people know them as. But again, they mean the same thing. Best risk-adjusted return projections for as far as the eye can see. And the interesting thing here that I like to point out is that they have the highest same-store NOI growth projections, which simply means that they are likely to have the best compound interest over long periods of time. It means that year after year, they're likely to have higher NOI go up. And again, in an asset class where you're likely to invest for a long period of time through an IRA, from my perspective, mobile home parks a great fit for retirement accounts for that reason. What we're looking for is the best compound interest over very long periods of time. So we feel like mobile home parks the best sector to be in. And I love to kind of share our little spin on how we manage them and our strategy, which we feel sets us apart and aligns well specifically for self-directed IRAs for a litany of reasons here, guys. We have a five-tier investment strategy that any investment sector and or deal individually must fall through for us to be able to buy that asset. So the very first one is long-term macroeconomic tailwinds. We've got to find deals that have demand that's going up at a higher rate than the new supply coming online. I've beat the dead horse on that. I'm not going to dig super deep. As you're well aware, mobile home parks fall within that respective confine, and it just helps lead to outperformance. Again, we allow the asset class itself to generate the outsized rate of return over long periods of time by virtue of the very nature of the macroeconomics of the asset class. The second tier is buying recession-resistant assets. We've talked a little bit about this, but again, we want to ensure that we protect the downside risk. So we always want to have assets that are going to be able to survive. All asset classes do well during periods of economic boom, but as Warren Buffett has stated, right, you find out who's swimming naked when the tide goes out. And mobile home parks have outperformed every single recession, right? Great financial crisis, COVID, so on and so forth. Mobile home parks are just a steady performer quarter after quarter. One of the publicly traded mobile home park companies had reported that they have multiple consecutive decades of every single quarter positive same store NOI growth. I can't think of another type of niche or real estate sector or company that has not had dips along the way. But because of the ridiculous supply and demand imbalance in the marketplace, it just allows folks to raise rents right through the recession, which is bodes well for investors in the asset class. In addition, we want to find a fragmented niche. Simply put, we like asset classes where institutional capital hasn't fully consolidated the space. If you have institutional capital that's fully consolidated the space, it's more difficult to buy great deals because there's so much more liquidity. If you've got a ton of buyers and a ton of sellers, it's going to be more of a perfect marketplace and a ton of liquidity where basically if the buyer wants to buy, he's likely to find a seller who's comfortable acquiring that right at that price, which the deal is probably going to transact right at market equilibrium. However, if you're in a fragmented asset class where there's not a lot of buyers and sellers, well, maybe the seller wants to sell the deal for $10 million and the buyer, he wants to come in at $7 million. And if there's not a ton of other buyers lining up to take that deal down, well, then maybe we can work through that bid-ask disparity. And if I can get my business partner, Kevin, in a phone booth with the seller, that it might be the first time this guy's ever sold a piece of commercial real estate. We've literally had this conversation thousands of times. We could typically find a scenario where we're able to negotiate a mutually beneficial situation that allows us to, from our perspective, buy with a really nice margin of safety. And that leads us to the fourth piece of it. We demand a margin of safety, right? We adhere to Warren Buffett's investment strategy of buying properties with a significant margin of safety. So we want to buy a deal that the purchase price is lower than the current market value immediately at acquisition. And we've done this ad nauseum over and over and over. And that just ensures that you'll have staying power in the marketplace because we can't control a lot of the things that go on in the marketplace, what cap rates trade for. We can't control that. That's outside of our control. So we always want to have a margin of safety just in case cap rates change, even if our NOI is going up. If a cap rate changes and goes higher, well, then the property value comes down. Well, we want to make sure that we at least have a nice margin of safety such that we're never in the red. We're never in the negative, right? And we've got to maintain that margin of safety throughout the entirety of the holding period. Last but not least, we want to invest for cash flow and legacy wealth. So in order for us to avoid outsized risk, we always got to buy deals that have positive cash flow in place from day one. And mobile home parks align exceptionally well with this. We're not going to attempt to time the market. Opportunistic developers that have myopic short-term business models and syndicators who promote maybe heavy value-add transactions, they eventually mistime the market. Somebody somewhere is going to mistime the market, and they cost investors dearly. Again, rule number one, don't lose money. Rule number two, don't forget rule number one. So we only buy deals that have cash flow in place from day one and can also add value to create legacy wealth. Because real wealth, it grows over time through efficient management of capital, through buying right and investing for the long term. So once we found a deal that we like, that's got exceptional long-term macroeconomic tailwinds, that we know, that we like, that we trust, that's operating well, we prefer to hold that deal forever. And that strategy allows us to build a portfolio of assets that generate cash flow, consistent, perpetual, infinite income, and allows our folks to build legacy wealth along the way as well. So I'll dig into a little bit about why we love a fund structure, but I'll just try to be brief here, guys. We've got numerous case studies, proven track record over an exceeding long period of time, but believe that the fund structure does outperform comparatively speaking to deal specific syndications. But let's try to skip ahead here to kind of why we feel mobile home parks and the strategy is a perfect fit for retirement accounts. You want to have an investment inside of a retirement account that ultimately doesn't require just constant attention and management. So, the idea of set it and forget it in a retirement account appeals oftentimes because you want to focus on other important aspects of your life, right? If this is stuff that's going to be in an investment account for 10, 20, 30 years, you just want to allocate it to an asset class that's likely to outperform and prudent managers of capital that can continue to help you grow with compound interest over time. From our perspective, this is a great niche that affords folks the opportunity to get that ultimate outcome. Again, also massive long-term growth, right? Ensuring that the not only is the capital preserved, right? Rule number one, don't lose money. Rule number two, don't forget rule number one, but it also grows over time. High quality compound interest over very long periods of time, providing financial security, right? In the golden years. That's the end game. And then the infinite retirement income piece that we talked about previously, right? This is a scenario where that traditional investment model is dead. That infinite retirement income derives from the flipping the script and the traditional investment advice of build a big gigantic pile of cash over 30, 40 years and then live off of that income. From our perspective, the infinite model is better. It is the virtue of creating golden geese, right? Having multiple golden geese that gets the chips off the table as quickly as we can, but we retain control of the asset because it's a buy and hold asset. And the cash flow that the asset throws off stays perpetually and remains in ad infinitum, into perpetuity. And that allows us certainty of income in our retirement years. That's a better option, in my humble opinion. It's how I'm setting up my family's income over long periods of time, so that we don't have to worry about the market, the whims of the market, but rather creating golden geese and income that's going to be resolute regardless of what the economic conditions are. This is what I'm doing for my family, and I believe that it's the best use of capital over very long periods of time. As I'd mentioned on the fund structure, guys, happy to dig in and much deeper at another time, but we don't have as much time as I would like to maybe dig into all the different myriad reasons why we prefer the fund structure. Suffice to say, we just feel like the returns revert closer to the mean, comparatively speaking. Yes, we might give up maybe that grand slam deal, but we also avoid the massive, massive risk of individual deal specific syndications where at some point, not every deal is going to be a perfect deal. And for that reason, just feel like the fund structure for this type of environment, right, in a retirement account over long periods of time is a more efficient way to manage the capital to try to de-risk the investment. So happy to dig deeper should you have an interest in doing so. Again, to the infinite income side, the savviest guys among us know that the best way to make money is to keep your money working for you. So this infinite income strategy, it opens the door to that tactic. It's a strategy where we're looking to return your entire original investment principal back while you continue to earn income from the property indefinitely. We have the ability to do this in mobile home parks. I like to think better than you can in the vast majority of other asset classes. It doesn't mean that you're no longer in the deal. You still own your percentage interest in the fund, and we continue to throw cash flow off. It just means we're doing our best to de-risk the investment, get the chips off the table, and then continue to enjoy the cash flow that the assets throw off into perpetuity. It's, from my perspective, the best way to generate cash flow and build build legacy wealth in a tax efficient manner. It not only secures your capital, but provides that continuous stream of income, turning a one-time investment into lifetime cash flow. From our perspective, by far the best way to generate the best risk-adjusted returns in the marketplace. And we've done this ad nauseum. We can throw up an exorbitant amount of case studies across the fund and deal-specific stuff. I will dig into maybe one here to give you an example of kind of real world what this looks like in time, years down the road after doing deals, right? We bought this deal in 2017, mobile home park portfolio in 2017 for $2.6 million up in Maryland. And we were able to implement our business model such that within 2 years, the value of the deal went from 2.6 million bucks to just over $6 million. And most folks at that time in real estate, syndications and the like, oftentimes sell the deal, generate a great internal rate of return, send the capital back to investors, and ride off into their merry sunset way, right? There's nothing wrong with that per se, but we don't feel like that's the best way to generate cash flow and build legacy wealth in a tax efficient manner. So instead of selling the deal, we simply did a cash out refinance, had a $3.6 million loan, sent all the capital back to investors in a non-taxable event. They retain their percentage interest ownership in the fund, and now they're on an infinite cash on cash return from that point forward. That never goes away. That's bulletproof year after year. And if you continue to build that snowball, build that compound interest over time, that cash flow continues to grow on behalf of you and your family. This is what we believe to be the best way to create predictability in your golden years down the road. So what is the end result? That was in 2019 when we got the chips off the table. So fast forward 5 years, what's happened subsequent to that? Well, the property had been worth $6 million, but like we talked about in mobile home park sector, it's got the best compound interest out of any respective real estate sector around. So fast forward to today, that property is worth 10 million bucks. That additional $4 million of value that was created in the last 5 years No additional effort was needed from the perspective of a limited partner. They would have not been able to partake in that in any way, shape, or form had we sold the deal many, many moons ago. They haven't paid any tax along the way on those respective deals. And that we'll be able to do yet another cash out refinance and another big chunk of capital back along the way, and then continue to enjoy cash flow for the foreseeable future. That's the definition of a successful business model and building a snowball, right? Where we get multiple bites at the apple. And while not every deal is that good, that's an example of what we try to do on behalf of our partners. And it's more easily had in the mobile home park sector than I feel any other real estate sector can do. We've got numerous additional case studies that we can share with you, deal specific individual transactions, and also kind of how we've done this in the fund structure. While we just kind of walked through that infinite model in the individual deal, we did that same thing in the fund where we were able to return all the capital inside of a fund structure within the first 3 years of the fund. In fund two was the same exact outcome within the first 4 years. We're able to get everybody's chips off the table, and then they're on an infinite cash on cash return. In fund three, we're well on our way to do the same exact thing. We've created tens of millions of dollars of sweat equity, just haven't tapped into doing a cash out refinance, get it off the table just yet. And then our current fund, same exact thing right now, 27 consecutive quarters of on-time distributions, the way that we would have otherwise anticipated. And inside of this fund, already been fortunate to build a healthy amount of sweat equity, over 10 million bucks inside of this fund in the same vein. So again, the phenomenal macroeconomic tailwinds allow us to, from our perspective, achieve outsized risk-adjusted returns. And again, emphasizing the risk here, guys. How do we do that again and again and again? Our chief focus is on removing the risk from the investment. We don't care if a return might be a little bit bigger projected on this deal over here, or if the cash flow might be a little bit bigger on this deal over here. If we're not able to de-risk the investment in a reasonable duration, we're not even going to look at that respective investment. So with every deal that we do, it's buy, improve, refinance, and hold for the long term, trying to get the chips off the table as quick as we can, and then focus on what matters, generate cash flow and build legacy wealth with as teeny tiny little tax obligation as we could possibly have along the way. That's what we want for our family, and we're doing our best to achieve that same exact thing for as many folks that want to join us as possible. So if I could sum it up in brief, one-time investment in the sector creates lifetime cash flow, and it has the opportunity for you to do just that for you and your family. So guys, if you want to dig deeper on kind of how we've done this historically and how one of our folks has achieved that end goal of creating infinite income, you can check out that QR code on the right side of the screen. It's a little PDF, one page, that gives a case study on how one of our partners achieved that infinite income on behalf of her folks. And a couple more QR codes here. One is if you want to learn more about our fund specifically, you can go to investwithsunrise.com. The QR code on the left will take you to that and get you more details on our actual investment opportunities if that's something of interest to you. The same case study is on the right there. And one more bonus that we're giving away for folks to just dig super deep, right? In the interest of self-directed IRAs, we feel like this asset class aligns so well with the mobile home park sector, aligns so well with retirement accounts, self-directed IRAs, solo 401ks, and the like, that we put together a pretty healthy, in-depth 6-video course on self-directed IRA investing because it's, mobile home parks and self-directed IRAs go together like peanut butter and jelly, truly. Long-term investing through a self-directed IRA paired with really high-quality long-term macroeconomic tailwinds. And so long as you manage those assets appropriately, we just feel like it provides the best outcome for everybody involved. So with that, we'll get out of here. Will, would you be so kind, bud? Feel free to jump back on. I hope that provides some value for everybody out there and helps at least one person along their investment journey for them and their families.
Absolutely. Wow. A lot of great information there, Brian. I really appreciate you sharing your intimate knowledge of the mobile home park industry and why you're so excited about the opportunities it provides. You've laid a good path as well for people that might be interested in the information that you have to offer over at Sunrise and any opportunities. Want to thank you one more time for lending your time. I want to thank everybody who may be watching this recording or with us now in the future. Also, I would like to offer, if anybody has any questions specifically for Camaplan about how any of this applies to your self-directed IRA account with us, or if you'd like to open one, please do not hesitate to go to our website, give us a call. We're always happy to help. And I hope you, Brian, and everybody else has a great rest of their day.
Agreed. Have a great one, Will. Thanks, guys. Have a great
Thank
day.
you.